Hi clients and friends, Mike Brady here. This is the first quarter review and the second quarter preview for 2011. Now, in general, the first quarter was a little bouncy in February, but overall a positive quarter. Actually a very strong and nice quarter. The indexes, which of course you can't invest in indexes, but they're something that you see in newspapers and TV, etc., that we refer to all the time. The stock market indexes in general were all positive, sort of in the middle numbers, 4, 5, 6, something like that. The big winner was the sector that is small cap, around 9 to 10% for the first quarter, depending on exactly which slice you look at. Corporate bonds were positive for the year, for the first quarter, I should say, and that was, that's good for them, 2-3%. Government bonds were pretty flat, either zero or actually negative between 0 and 1%. Once again, depending on which slice and what duration you want to look at. So for this second quarter, what's going to happen? Boy, that's always a tricky one. We have to look at it, I think, week and month by month. Some of the things that I will be paying attention to will be quantitative easing ending in June. Quantitative easing, it's actually QE2 we call it, has been an influx of capital into the markets, and that's going to end in June. Also, Bernanke is going to give his first ever press conference at the end of April, and boy, I think if you've been watching my videos and my newsletter, reading my newsletter, I'm not a big fan of Ben Bernanke, so I'm kind of curious what he's going to say and, well, kind of what the reaction is to him. I'm going to continue to watch for the real numbers. I'm becoming more and more of a proponent that what you read and what gets put out there is not really telling the full story. I mean, a great example would be unemployment. Unemployment rate is 8.8% right now, which is supposed to be good news, but the U6, which is the unemployment number, including people who have given up looking, is quite high, 16-17%. So I'm going to continue to look at what the real numbers are telling us, the real data. Just one more example while I'm thinking about it is inflation. Inflation, the CPI does not include food and oil, as if we don't drive or eat. I mean, that's a goofy number. So what's really being the true numbers so that we can understand what the recovery is saying. I'm going to continue to watch oil. Oil has really increased in the last 3-4 months or so. And as I mentioned at the beginning of the year, oil could be a real sidetrack, a good derailer for the economy if it increases. And it has increased quite a lot since the beginning of the year. I don't have the number right in front of me, but as I recall, it was around $88, and now it's about $113, $114. So it has started to increase, and that's of concern for me. So anyway, these are some of the things that I'm going to really watch very closely this second quarter. And of course, I encourage you to give me a call as we go through the quarter if there's any concerns or any questions you might have about the impact of this or that on the markets and on your portfolio, etc. So anyway, my name is Mike Brady. My company is Generosity Wealth Management. Phone number 303-747-6455. I'm a registered rep with Cambridge Investment Research, and we'll talk to you next week. Thanks. Bye-bye.